This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. We have some news, which is basically profit taking, but triggered by a headline on OpenAI. So let me just go through the heat map real quickly and show you what I mean. First of all, you can see the dollar is rising back up into this kind of 98.78 level. Above that is another headwind for bulls. That is also corresponding with a big, nice, firm pop in the 10-year yield above my double line in the sand. 4.37 is where it sits. Again, another headwind to bulls. You have crude or oil moving higher above my 91 line in the sand. Again, a headwind to bulls. So Bank of Japan needs consensus. They had 3 dissenters for holding rate hikes. That means there's a little hawkish print going on with the dollar yen today, even though it's going to get tapped back down because it's intervention and they don't want a yen carry trade unwind. Nonetheless, it is definitely contributing to the overall feel of headline risk and macro event risk. Again, yen carry trade unwind is a risk that I think is pushed into Q2, Q3 timeframe, but it makes June even more vulnerable for a hike given rising inflation in Japan, specifically price of energy. Okay, so what did the markets do? Well, we had this dump, as you can see, a little gap down pre-market in the Qs, which followed through a little stabilization just before we go to the market open. Same thing with SPY. The drop is in large part due to some news that is related to OpenAI. They are basically letting folks know that they missed the 25 revenue target for ChatGPT, and they also missed their goal of reaching 1 billion weekly active users. This is all according to the Wall Street Journal, totally separate from the slugfest that's going on right now in court between Elon Musk and Sam Altman. Anyway, this was reported by their CFO, and this is news because it is representative of a bigger risk that this growth engine isn't as strong, yada, yada. But the bigger issue right now is that, honestly, as we talked Monday morning, this was just so exhausted as it relates to profit taking coming in. I could see it underneath the surface. Semis were extended, and now we have some pullback. So I did an update to my post. First, the post Monday morning was fragile upside. So going nowhere fast is about to change. Boom. The floor meets crash protection. Read that part because when I posted, we can have this reversion to the mean, but it is going to hit solid support about SPX 6950. So solid support means there'll be folks that'll buy that dip and dealers and such. So let's just be mindful of that line in the sand as it relates to the market. We almost hit my 7191, which was the SPX target on the upside. We didn't quite reach it. It's not a game of perfect anyway, but what we've got this morning, as you can tell, is a little dip here. And I updated for the Qs, specifically this 651.85 gap fill level is really going to be kind of the goal we go for. But this is showing itself pretty firmly in the SMH dump here, as well as Avgo. There's rumors that Google's going to be moving away from Broadcom. So that has been also a gap down. You can see NVIDIA just went from $219 to basically $10 in the pre-market. So this was just a lot of euphoria, which is why I did the post and which is why I did a follow-up. And the follow-up this morning is found under market thoughts. Basically, you've got AMD, ARM, NASDAQ related semi plays getting hit hard with Oracle. Again, SPX 6950 is strong support. Gold and silver shorts are working extremely well. Check out that silver, that nice channel that I drew for you right here. And now we've got pre-market coming right into price target at 65.36 on an intraday. Basically, this is just weekly weakness and daily channel drop and intraday temporary support. Same thing with gold. DBA, on the other hand, is just crushing it, unfortunately, because of this sad thing called food inflation on fertilizer supply shocks. And this recommended wheat trade is doing gangbusters. This is the futures for Kansas City. But either way, you've got some plays from Monday that are reversion to the mean in semis on profit taking, which is happening, and a few continued longs in the food inflation sector space. Otherwise, we still have Mag 5 earnings reporting tomorrow after the close. 4 of the hyperscalers, Apple on Thursday, ISM on Thursday. I talked about how that's important also to the semiconductor cycle. And then, of course, the Fed rate decision, which is going to be no change expected, but nonetheless, we'll see Powell's last press conference as Fed chair. Gave some levels for some semi-profit taking shorts. Let's go over those now. SMH, very specifically, this is really simple. Gap fill. So the gap fill on SMH is 482.15. It will hit that. It's just gonna hit that. But then how is it defended there? Because we're still obviously a market of exuberant bulls, but it would have to break that to really start getting some indigestion. The SMH hasn't even made it in to the 8-day EMA. And right now the Qs are likely going to digest this 657 area and at some point come back down, tag that trend line, overshoot to 652, but we're not there yet. So right now they're having a little tussle. There is a break potential coming back in 659 for the Qs. That would be very productive. You'd have a nice 650. And we literally talked about 650 yesterday because why? Simple. If we get a fake breakout fast failure, this is where it's going to go tag last week's close. Look at that, 65000. So this was the area that had basically said if you want to do a reversion to mean profit taking play, that's where you're likely to come in, 650 area. And we also have the pension selling end of April, not a lot, but like 20 billion or something to make the market move, and profit taking big trigger.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.